Hi traders, and welcome to another video. In this video we will teach you the most important technical terms that you will need to get started. In forex trading, currencies are always quoted in relation to another currency. So we're always trading a currency pair. For example, Euro USD or GBP JPY. So when you trade in the forex market, you buy or sell currency pairs. When you're buying a currency pair, you're betting on the strengthening of the first currency in the pair, the base currency, against the second currency in the pair, the quote currency. When you're selling a currency pair, you're speculating that the first currency will weaken and thus decline against the second currency. Buying is also called going long, selling is also called going short. What is a pip? It's one of the most used words in forex trading, and once you know what they are, the more you have of it, the happier you'll be. When trading currencies, pips are the most basic unit of measure. Just like a unit of measure for liquids is ounces, the unit of measure for currency quotes is pips. Take a look at the image below. Alright, now what is a lot size? A lot is a unit measuring a transaction amount. When you place orders on your trading platform, orders are placed in sizes quoted in lots. The standard size for a lot is 100,000 units of currency. And now there are also mini, micro and nano lots, and those are 10,000, 1,000 and 100 units. So basically it's your position size. How small or big do you want to enter a trade? And don't worry if you can't answer that question. We've got you covered on that. Okay, so measuring pips can be a little bit tricky in the beginning. But actually it's not that hard at all. We're just gonna need a little bit math from kindergarten. As you have seen on the image on the previous slide, the pip is usually the fourth number after the decimal point. There are some exceptions on this rule, for example when JPY is involved in the pair, then it's the second number after the decimal point, but most of the time it's the fourth number. As you can see, here are some examples where we highlighted the pip. Okay, so now that we all know what a pip is and where to find it, it's time to explain how to calculate their values. Take your time with this information. It's a required knowledge for a forex trader, so don't even think about trading when you're not comfortable with pip values and calculating profit and loss, or you might risk way too much money on a trade. In the trading industry, you will hear a lot of people say, I made 50 pips today, or I lost 20 pips on that trade. But with that alone, you don't know if that's a lot of money or not. And then again, what is a lot of money for you might not be a lot of money for someone else. But that's something else, of course. That's also why traders don't speak in terms of money, but in percentages, gains or losses. Okay, back to the pip. To know how much you can win or lose on a trade when it moves a certain amount of pips, you need to set your lot size. Don't worry, we will show you how to do this on your MetaTrader when you understand the theory behind it. Lot sizes are expressed in categories: standard lots, mini lots, micro lots. Each one holds its own value. A standard lot is worth about $10 per pip. So if a trade moves 30 pips, we make or lose $300. That might be a bit much for your first trade. So one step down is a mini lot. That equals $1 per pip, and a micro lot is worth 10 cents per pip, which might be a better one to start with. Remember, it's not about making big money right away. First we need to learn how to make good trades, and then we can gradually increase our risk by upping our lot size. Let's go over some examples so it's easier to grasp things if you didn't already. Example 1. Let's say we buy Euro USD at 1.18200 and our position size is one standard lot. This means for each pip the pair moves, our equity will go up or down by $10. So let's say we have a 15 pip stop loss at 1.18050 and a 45 pip take profit target at 1.18650. This tells us we can lose 15 times $10 equals $150, or we can win 45 times $10 equals $450. That's a 1 to 3 risk reward, not bad. Example 2. In this example we do exact the same trade. We buy Euro USD at 1.18200, but we change our position size. Our position size is now a mini lot. This means for each pip the pair moves, our equity will go up or down by $1. So let's say we have a 15 pip stop loss and a 45 pip take profit target, then this tells us we can lose 15 times $1 equals $15, or win 45 times $1 equals $45. Example 3. In this example, we do exact the same trade again. We buy Euro USD at 1.18200, but we change our position size. Our position size is now a micro lot. This means for each pip the pair moves, our equity will go up or down by $10 cents. But to mix things up a little, instead of using one micro lot, we use 3 micro lots. So just as in the previous 2 examples, we have 15 pips stop loss and a 45 pip take profit target. So this tells us we can lose 15 times 30 cents, because we use 3 micro lots instead of 1 micro lot, equals 30 cents. So we lose 15 times 30 cents equals $4.5, or we win 45 times 30 cents equals $13.5. This is how your neighbor can make $150,000 on the exact same price movement where you make $150. It's all because of the lot size. Some crucial terms to understand as a trader are entry, stop loss, take profit, and break even. These are words that are in direct relationship with our trades. Now, what is an entry? When a trader buys or sells an asset, he opens a position in the market. That's called an entry. He basically entered his trade. Trading is risky. The good thing is you decide how much you risk. The price you mark as your max loss will be your stop loss. This will automatically close your trade when it gets hit. Look at it as protection, so you won't lose all your money in your account. If you're smart, you always use one. Our take profit is almost equally important. This is an order that will close our trades automatically once it reached our profit target. It will take our open profit and add it to our account balance. A break-even is a little bit different. Whenever a trade is going to the right direction and we are in the money, we can decide to move our stop loss and place it on top of our entry line. Now we are basically in a risk-free trade, which means we can't lose any money from this point on. We have no risk of losing anything. Let's say price comes back and hits that stop loss, then we have made a break-even trade, meaning we won or lost zero. Something else that we can do if we want to take it up a notch is moving our stop loss in profit. That's then called a stop profit. That's a way of securing at least a part of the profits we are in. To calculate our lot size, we need to follow 3 steps. First, define our stop loss. To know what lot size we should use, we need to know exactly where our stop loss will be. Once we know how much pips that's away from our entry, we can go to the next step. Define percentage risk. Defining our risk means how much money are we willing to lose if the trade goes bad. Keep in mind there will be losing trades. That's a natural part of trading. We just need to make sure those losses don't blow our account when they happen. This is essential if you want long-term success. Choose a percentage you want to risk and stick to it. And the last step obviously is knowing your account balance. Let's practice with an example. Okay, let's say we see a perfect trade setup according to our trade plan and we're confident that this trade will work out just the way we want. We want to enter, and so we need to calculate our lot size first. It's easy, we just need to follow 3 steps. Step 1, define our stop loss. We measured it on TradingView or MetaTrader and we know it's 15 pips. Okay, what's next? Define our risk. We decided that 2% won't hurt us too bad should the trade go wrong, so we go with 2%. and we are trading with an account of $10,000. Let's go through the calculation. 2% of 10,000 is $200. $200 divided by 15 pips equals $13.3. If we know that a standard lot is $10 per pip and a mini lot is $1 per pip, then we can open 1.3 standard lots, or in other words, 13 mini lots. So for every pip that price moves, our account equity will go up or down with $13.3. We know this can be a little bit challenging in the beginning, but the more experience you gain, the more easy it will be. Another way is using special calculators that make the calculation for you. And as always guys, thank you for your attention and we'll see you in the next videos.